the recent spread of the Delta variant should be viewed as a major risk factor ahead in Japan. And so its impact on the Japanese economy remains to be seen. So, but at least for now, we do not think that even though the Delta variant poses some downward risk to the Japanese economy, so this basically means more of a delay in the reopening phase and unlikely to delay the economic recovery path itself down the road for a couple of reasons. Firstly, despite the rising number of infections of the Delta variant, we know that the vaccines remain effective in preventing severe diseases. So people who want to protect themselves can do so, and they can live in the virus environment. And secondly, if we look at the experience in the UK, for example, which faced a significant pickup in the number of the Delta infections ahead of other advanced economies, consumer activity has declined, but only modestly during the period of rising Delta cases. But another potential risk linked to the pandemic may come from Asian nations, where the Delta variant is spreading rapidly, but so progress of vaccination tends to be delayed, so that the increasingly severe restriction to economic activity has been implemented, including a temporary closure of factories. This could develop into a major disruption in the global supply chain, which is already under pressure. So eventually, it might adversely affect the production activity in Japan, auto industry in particular, if it affects supply chain of semiconductors. Currently, this is in your risk scenario, not in your baseline scenario, but we need to carefully watch for this risk.
And these global supply chain disruptions, Naohiko, have been manifesting themselves in inflation, in the higher cost of goods. To what degree, after so many years of grappling with deflation in Japan, is now inflation something that the country needs to be worried about?
Actually, we do not think that the inflationary pressure will pose any serious risk to the Japanese economy. First of all, our analysis reveals that as long as rising input prices, especially commodity prices, is chiefly driven by global cyclical upturn, the net impact tends to be positive, with a positive impact from increasing exports and other factors outweighing the negative impact caused by an increase in the input prices. And secondly, recognizing that the Japanese consumers are highly sensitive to any price increases, chiefly due to the stagnant wage trend, which has taken root over the long term, Japanese corporations tend to limit price hikes out of concerns of the losing customers, even if the commodity price rises significantly. This suggests a limited negative impact on consumers. The possible flip side of the coin, though, is that such a low degree of the pass-through tend to put the downward pressure on corporate profits.